Got the first management joining us on the show, and that's Syrma SGS. Now, they reported the numbers a while back. It was a strong quarter. We saw a revenue growth. There was an improvement in margins. And the company says that they're confident that they will grow in line or beat the industry growth rates of 30 to 35%. JS Gujral, MD at Syrma SGS, is now joining us on the show. Mr. Gujral, thank you very much for joining in. Good morning. This is Reema here. So first, just to get some numbers out. For FY25, you were guiding for 4,500 crore of top line and 7% plus EBITDA margins. That stays, right, as we are close to wrapping up the year?
Yeah, I think, thank you very much for having me on the show. I think we are in line to achieve the 7% EBITDA margin. And the top line could be marginally here or there because if the product mix changes, if the consumer business goes down, the top line goes down, but it has a positive impact on the EBITDA margins. So we stand by the absolute numbers of EBITDA margin, which we had guided. It was 300 plus 310 crores for the current year. And we are in line with achieving that.
Okay. And revenue should be close to 4,500 crore.
I'm not committing 4,500. It could marginally vary because if my product mix varies,
Sure.
the top line varies.
Got that. Okay. What about FY26? What is the outlook? You've got the Pune plant, which is commissioned. It will start generating revenues as the year progresses. So what is FY26 looking like in terms of top line and even on the EBITDA margin, since you are focusing on higher margin businesses and products?
You see, for the FY26, I think we are in line with what we had guided, that we grow at the industry average or plus industry average, which is 35%. And this year we'll achieve a EBITDA margin of 7% or little more than 7%, which guides us that we should be achieving around 7.5% next year. The Pune plant has started, it has been commissioned. It's undergoing approval from the customers. So in a business like us in automotive and other things, after you commission the plant has to be approved by the customer, and that's a 3 to 6 month cycle. But I expect that next year, 9 months, we'll have revenues coming in from the Pune plant.
Okay, all right. Hi, Mr. Gujral. Good morning and good to see you. When I wanted to ask you about, how you're seeing order activity. Is there any kind of slowdown that you're experiencing? So that's point number one. And point number two is around 35% of your order book is consumer facing, right? So how do you see revenue recognition from this part of your business? FY25 and then FY26. I think it's around 35 to 40% or thereabouts.
See, for FY25, we had guided a consumer business contributing about 40% of our revenue. And I think we are in line to achieve that. 1% here or there, it could be there. Next year, we are targeting that the consumer business should come down as a percentage of my total revenue. Our wish is it should come down to 35%. Whether it is 35 or 37, I really can't say today. But the wish and the sort of the strategy of the management is to focus on growing the high margin business. And once the high margin business grows, even if the consumer continues to grow, as a percentage of the total sale, it will come down. We are targeting it should be about 35, 37% in FY26.
Okay, all right. And there is no big slowdown in terms of ordering activity. Is that correct?
There is no slowdown as such on the ground, but the general ecosystem is one of caution. You see, with all these global events taking place, I think it will be a while before the dust settles down and people start taking forward calls, long-term calls. Currently, it's America with all the tariff wars going on and everything. It's a sort of a caution in the minds of the decision makers.
So talking about the global uncertainty, exports were 23% of your revenues. You wanted to increase it to 25 to 30%. But there is that slowdown in Germany also. So on exports, what kind of a year will FY26 be? Will you still see that 30-35% growth rate that you expect for the consolidated business, or exports will be slower? And what could the revenue contribution increase to?
The exports in FY25-26, I expect them to grow about 20%. This year has been a subdued year in terms of exports because Germany was really down. And the contracts which we got from the USA, they are kicked in only in the second half, or rather the third quarter of this year. Next year, I expect the exports to grow, and I think it should cross the 1,000 crore mark. And what we are strategizing is adding more customers, which we have already added, and they're coming on stream in FY26.
Okay, all right. Another important factor for your company as well as for the industry is the PLI benefits. So how will these PLI benefits accrue for your company in FY25 and FY26, if you could quantify it?
See, PLI benefits for our business is only for about 30% of my revenue. My total consumer business is about 40%, out of which the PLI business may be 32%. So the 68% business or 70% business is not dependent on PLI revenue. And for the current year, we will account for about 18 to 20 crores of total PLI benefits. And going forward, also, it will be about the same figure because PLI is already approved. The capex is already approved. The incremental revenues we have to do. So there is no scope for significantly increasing the PLI revenues because there's a cap on the total sales which we can do, which are covered under the PLI. But as I said, 70% of my revenues are non-PLI related.
Quick question, Mr. Gujral. In the next 3 to 6 months, do you think you'll raise money via the QIP route? Because you've got an enabling resolution.
See, we have an enabling resolution that was essentially if we have to do some inorganic acquisition, which we are always looking at. And the philosophy of the management for the inorganic acquisition is that it gives me access to certain technologies or certain regulatory approvals, which I don't have in my company today. For my organic growth, which I'm projecting, I don't really need the funds. So it was an enabling resolution that should the opportunity come in for an inorganic acquisition, then we access those funds. But for my organic growth, I really don't need them.
Right. So good morning, Prashant here. Just one briefly, if you can tell me, you said it'll be a while before this dust settles. The uncertainty is on with regards to what? Demand uncertainty, or whether, basic considerations like where to manufacture and those kind of things?
Yeah, hi, Prashant. See, when the tariff things, which is in the news on the front lines every day, I don't think on the electronic part, the tariffs will be that significant or they will be material. But till that thing settles down, we have to re-strategize. For example, if a 5% tariff comes in on my exports to America, we have to re-strategize how do we do it. So
sorry, you may have...
Orders for 25-26 are firm. It's a long-term thing which we have to strategize. That is beyond 26.
I see. No, very helpful. Thank you very much, sir. Appreciate you joining in and good luck. And we hope the tariffs are sufficiently low. But we'll have to see and we'll know when we know. Thank you for joining us with that perspective.
Always a pleasure. Always a pleasure.
Always a pleasure.